Oracle stock is soaring in 2025. It's already up over 38% year to date. Of course, I'm happy about that. I recommended this AI stock as one of the best 9 stocks to buy this year when nobody was making that recommendation. So I'm happy to see this underloved stock is performing so well. But what's going on with the company? Why is the share price soaring? That's what I'm going to talk about in this video, highlighting the reasons why the stock is soaring and what's going on with Oracle stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
The biggest thing with Oracle has been RPO, remaining performance obligations. These are deals that Oracle signed, long-term contracts that eventually turn into revenue, but first they go into the company's remaining performance obligations. If you didn't already know, when a company like Oracle signs a 5-year deal worth $10 billion, they can't tell investors that they generated $10 billion in revenue. What they can tell investors is that the remaining performance obligations increased by $10 billion. Then, as they perform those services that they contracted to perform, it eventually turns into revenue. And it's a signal of organic demand increasing for the company's products and services. And the company's remaining performance obligations, well, they now stand at $138 billion. That's up $8 billion from the previous quarter, and it's up 41% year over year, just to signal how quickly this company's orders are increasing. And this increase in demand, something that I've been talking about for over 6 months now, close to a year now, something that I forecasted happening for Oracle, given its position in the artificial intelligence industry, that now has generated accelerating revenue growth and accelerating remaining performance obligations. Oracle is now the leader in enterprise back office with software as a service solutions for enterprise resource product, financials, supply chain, and manufacturing. Oracle's management team says now with over 100 AI agents, along with strong bookings and higher renewal rates for their strategic products, I expect the cloud applications growth rate will accelerate in the coming year. That's great to hear. And you've heard me often talk about acceleration in a business, and that's very attractive for investors. Acceleration means not only is your business growing, but the rate of growth is increasing. That means if you grew by 10% last year, this year you're growing by something more than 10%. It could be 12, 14, 16, etc. And it signals an invigoration of a business, especially exciting for businesses as mature as Oracle to reinvigorate and reignite revenue growth. It gets investors excited, and this can explain one of the main reasons why the stock price is up so much. And this is something I've been predicting for the company for a little over 6 months, maybe a year. I've been talking about how its position in the AI industry has been very attractive, and you're now beginning to see the fruits of that position for the company. Additionally, its OCI segment has seen exceptional demand for infrastructure services, and those contracted, non cancelable bookings in RPO give us confidence that their OCI revenue will grow over 70% this current year. 70% revenue growth for a company as mature as Oracle. These are revenue growth rates similar to, of course, not at the level of NVIDIA. And when you're thinking about mature companies in the AI industry, Oracle is up there with NVIDIA in terms of revenue growth rates, right? Other companies that are benefiting from the increases in effectiveness in AI, like Meta Platforms, AMD, Microsoft, Amazon, Alphabet, they're generating nice growth, but nowhere near these levels. So, what Oracle gives customers is flexibility. They can run their databases in OCI, in private clouds, or in partner clouds, or in multi-cloud offerings, right? So you've probably heard a lot about businesses moving to the cloud, moving their IT from being on-premise to the cloud. But not every business wants that. Some businesses want to be on-premise. Some businesses want to be on the cloud. Some businesses want a mix. Oracle offers them that flexibility. They can have a mix, they can have all of one, they can have all of the other. And that's what businesses want right now. They want that flexibility. Not every business has the option to go to the cloud completely. Some businesses have to retain some of their technology on premise due to maybe regulatory purposes, maybe security preferences, whatever the case might be. Not every business wants to go to the cloud. Because 2025 has started off so well, calendar year 2025, it's fiscal year 2026 for Oracle. They are raising their revenue guidance for fiscal year 2026 to over 67 billion. That's up over 16% for the year. Total cloud revenue was up 27% in the most recent quarter to 6.7 billion. Overall revenue for the quarter was 11.7 billion, which was up by 14%. So what the company is forecasting for fiscal year 2026 is higher than what they reported in the most recent quarter of 14%. And that coincides with the management team's forecast that their revenue growth is accelerating. Demand for their products and services are accelerating. OCI consumption revenue was up 62%, and demand continues to dramatically outstrip supply. Wow. These are the kinds of things you love to hear. I love to hear when a company says demand exceeds supply. But Oracle isn't saying that. Oracle is saying that demand dramatically outstrips supply. That's how much demand there is out there for AI computing power and AI overall. Oracle is benefiting from that. That's why the stock price is up so much, is because the company's products and services are highly in demand. So revenue is increasing, profits are increasing, remaining performance obligations are increasing, which signals that this increase in demand is sustainable. It's not just a stock price that's increasing based on hype or enthusiasm. It's a stock price that's increasing based on fundamentals, based on improvements in demand, and based on the company's position to continue generating that kind of demand for its services for the foreseeable future. And that's great news for Oracle stock investors. And that explains why I've had Oracle stock rated as one of the best 9 stocks to buy here in 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.